I want to show you in setup that, when used properly, gives you some of the cleanest entry and exit signals you'll ever see. In this video, I'll walk you through the exact settings, how to apply them, and how to take accurate buy and sell trades step by step. Just stay with me till the end so you don't miss anything. So I'm in TradingView, and for this strategy, we need 4 exponential moving averages. First of all, don't worry, if you're on the free version of TradingView, I'll show you how to get all 5 indicators on the chart on the free version without any issue. First, let's add the EMAs. Open Indicators tab from here, and search for ribbon. Select Moving Average Ribbon, this one. This one lets us place 4 moving averages on the chart, but we need to adjust everything so it fits our setup. Open the settings. You can do that from here. Since we need exponential moving averages, set all of them to EMA. Now let's adjust the lengths. For the first EMA, set the length to 8. For the second EMA, also set it to 8. For these two, change the source. The first one should use high, and the second one should use low. Now for the next pair of EMAs, change both lengths to 89. For the third EMA, set the source to high, and for the fourth one, set it to low. Make sure to copy the exact settings I have shown you here. Next, let's fix the colors so the structure is easy to read. The 2 8-length EMAs will both be white, and the 2 89-length EMAs will both be green. Then increase the line thickness so everything is clear on the chart. Carefully change the settings as shown, and close it. This is it for this indicator. Now that all the EMAs are ready, we add the final indicator. Open the Indicators tab again, and search for Parabolic SAR. Search for it and add it. It's a built-in TradingView tool, so nothing special is needed. Everything is set. Now let's talk about how this system works, because once you understand the logic behind it, the entries become very straightforward. On the chart, the 2 green EMAs, the 89-length high and low, form what I call the green channel. It represents the midterm trend direction. The 2 white EMAs, the 8-length high and low, form the white channel. These stay close to price and help us see short-term momentum. We use the green and white channels to confirm the trend, and Parabolic SAR or price action to confirm pullbacks and entries. Let's go through it slowly. For a buy setup, the first thing we want is the price to completely move above the green channel. This suggests the market is shifting into a bullish environment. But that alone isn't enough. We want more strength behind the move. After price goes above, we wait for the white channel to also lift fully above the green channel. This tells us the shorter-term structure is now aligned with the midterm structure. For example, when this candle closes, the white channel is fully above the green channel with no overlap. This is exactly what we want, but we still don't enter a trade here. The market might pull back again, so instead of jumping in too early, we wait for that pullback. To identify the pullback and the end of the pullback, we can use price action or Parabolic SAR. You can choose whichever you're comfortable with. First, I'll show you how to use Parabolic SAR, and later, I will also share how to identify a pullback using price action.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
When price is rising, Parabolic SAR dots form below the candles. When price begins to pull back, the dots flip to above the candles. That flip tells us a pullback has started. We want the candles to touch the green channel to be considered as a pullback. Now we wait. Once we get the first dot back below the price again, this means upward momentum is returning and the pullback is likely over. That first dot below the price becomes our confirmation. In this example, when this candle closes, we get the first Parabolic SAR dot below the candle. That confirms the buy signal. In practice, we enter a buy position right there. The stop loss can go below the green channel if the distance is reasonable, or under the pullback low if the channel is too far. The green channel stop is the safer one. The take profit will be set at a 1:2 risk to reward. Now let's go over the price action method. Here we wait for price to pull back toward the green channel, inside the green channel, or slightly under it. Any of these are fine as long as the white channel hasn't crossed below the green channel. Before the pullback forms, a swing high appears. That swing high becomes our reference resistance level. We mark that level, and if we later get a candle closing above that swing high, we know the pullback has ended and the market will continue to move ahead. That gives us a clean buy entry. The price action method is simple and gives a bit more control once you practice it. One important thing, to reduce risk, we only take the first pullback after the white channel goes above the green channel. We ignore all second and third pullbacks in a buy setup, because by then, the risk increases and the trend can weaken. Now let's switch to sell setups. For a sell setup, we want the price to fully drop below the green channel. That tells us the market may be shifting into a downtrend. But again, just like before, we wait for confirmation. The white channel must also move fully below the green channel with no overlap. Once that happens, we prepare for a pullback. When price is falling, parabolic SAR dots appear above the candles. To detect a pullback, we wait for the first dot to flip below the candle. That means price is temporarily rising. Then, to confirm the end of the pullback, we wait for the first parabolic SAR dot to flip back above the price. That means bearish momentum is returning. This dot becomes our sell signal. In this example, when that candle closes and the dot flips back above price, the sell signal is confirmed. We enter a short trade there with the stop above the green channel and target a risk to reward of 1 to 2. You can also use price action instead of parabolic SAR. After the white channel is fully below the green channel, wait for price to pull back near or into the green channel. Before the pullback forms, a swing low will appear. That becomes our reference support. Once that swing low breaks, the pullback is complete and we enter a sell position. Again, stick to the first pullback only to keep risk low. Remember, no trading strategy wins all the time. Losing trades will always happen, and your job is to manage risk so losses stay small. If you don't follow proper risk management, you will blow the account sooner or later. There are many amazing guides on it you can find on YouTube, and I really recommend watching it. That's everything. If you have any questions, drop them below. I try to respond to as many as I can. If you haven't subscribed yet, make sure to do that and turn on notifications so you never miss new videos. Thanks for watching the video till the end. I'll see you guys in the next video.